Policy Matters is a conversation platform which aims to provide reasoned analysis and context to the activities, reforms, and policies of the federal government of Ethiopia. Exploring various reforms the government is undertaking, the conversation platform aspires to enable nuanced and informed understanding.
Hello and welcome to Policy Matters. We're here today to discuss something very exciting, the formation of a regulated capital markets in Ethiopia, something that's been in the works for a very long time, but finally has come to fruition. The Council of Ministers has approved the proclamation to establish the Capital Markets Authority in Ethiopia and all the other institutions that support a successful launch of the market. And to help us understand what the government went through, what the processes were, and what the way forward is, we have here today with us Melesse, who is the Senior Macroeconomic Policy Advisor for the National Bank of Ethiopia and also for the Prime Minister's Office. Let me start out by saying Ethiopia in the 1970s, 40 some years ago, used to actually have some semblance of a capital markets. It used to have something called a shared dealings group. A few companies were listed in there. But of course, since then, nothing of that kind existed. In fact, this is an interesting thing. Today, Ethiopia, with the GDP size that it has, is the only country, if I'm not mistaken, in the world, certainly in Africa, that doesn't have a stock market. So I think this initiative, this program, the one that the Council of Ministers recently approved, the proclamation, is timely. And you are the team leader, so obviously you have a lot of experience. You're going to explain to us what this is all about. So giving you that as a lead, that we did have some semblance of a market 40 some years ago, tell us how, use this as a lead to explain to us what you guys have done, how we got here.
It is true, you are right, that Ethiopia is one of the largest economies without a stock exchange, without capital markets.
Right.
And it's true that the capital market initiative in Ethiopia has been dormant for about 50 years.
Right.
So this project basically is resurrecting something that has been dead for about 50 years. Now, the way we got here is that, first of all, this comes from the homegrown economic reform program that the government of Ethiopia launched a year ago, whereby macroeconomic policy reforms, structural reforms, and sectoral reforms were the main pillars of this reform. And development of capital markets was also one of the pillars because finance is a key for economic development, of course. So based on that and the direction given from the government, the National Bank of Ethiopia has been taking the initiative to put that into work, meaning look back to the historical precedents, what happened, and there were studies, by the way, especially since the 1990s, several initiatives and studies. You were involved, in such studies. So what we did in the current phase is that we look back into history, and we took a look at the various studies, the various proposals, initiatives, and use that as a background. And in fact, on top of that, what we did is we look at current standards, principles, best practice principles, the examples of countries that are relatively at our level of development and with a relatively success history of capital market development. And we took those as an example. We reviewed their legal instruments, their acts. We reviewed their policies.
Right.
We also reviewed the best industry principles and practices as set out by the industry or the sector standard setter, which is the International Organization of Securities Commission, IOSCO principles. So based on that and using those principles, we started discussing with experts and stakeholders, and even before drafting the proclamation. We discussed with stakeholders, engaged with experts, including local experts and international experts on key policy issues, because we needed to have a common understanding of what are the right set of policies for Ethiopia to adopt. And then after that, we started drafting. We had an intergovernmental working group And that working group comes from, of course, the National Bank of Ethiopia is a leading institution, but we have the Ministry of Finance, we have the Attorney General participating in the process. We assembled that team, and then we have also advisors that we hired from internationally with the experience on capital markets. And then we put together the draft, and then we circulated that draft again to a broader group of stakeholders and compiled feedback, very useful feedback, incorporated that feedback, and then we basically presented it to the government officials, and then finally was considered by the Council of Ministers and adopted by the Council of Ministers, and now being forwarded to the House of People's Representatives.
I'm glad you mentioned the initiatives that were started back in the early 2000s, late 1990s, early 2000s, but and some of us were involved in that process. And in hindsight, it looked like it was a bit too early. I mean, the Ethiopian economy was a tiny little thing, but since then, it's now amongst the third, fourth largest GDPs in sub-Saharan Africa. The private sector is growing. So it's a continuation. There was a big gap that year, but now we're here. So to continue this discussion, tell us, my view is that this is an evolving part of the overall financial sector reform. You have started last year with the money markets. You're now in the process of establishing secondary markets for treasury bills. And then the CMA is, again, let's call it phase 2 or phase 3 of that process. Can you walk us through, can you explain to us what CMA is, how it's intended? Because the key takeaway for me reading the proclamation was one of the main outputs, and the one that the council approved is the establishment of the Capital Markets Authority, which is critical. Before you go anywhere, we have to establish. So walk us through very quickly what CMA is, how it intended, and how it fits into the overall reform of the economy, of the financial sector in particular.
Yeah, very good. So let me start with putting this in perspective in terms of the overall financial sector reform. As I said earlier, it starts from the homegrown reform program, the broader macro, financial, and structural and sectoral reforms, and of which the financial sector reform is one of the main pillars. Right? So when we think about the capital market development, in general, financial market development, we had 3 phases. The first phase is to launch the money markets, which is the shorter, the shorter in terms of duration, version of the financial market. So last year in December 2019, actually in December 2019, the first competitive T-bills market was launched. And since then, it has been conducted fortnightly, bi-weekly, and has been growing in terms of liquidity, in terms of the number of participants, and has been going very, very well. And in addition to that, the National Bank of Ethiopia is now working to also launch a well-functioning interbank money market, which is also critical, again, to create liquidity at, on that short version of the financial markets. So we are working with Frontclear and Financial Sector Deepening Africa. Frontclear is a Europe-based money market expert in a consultant firm. And they are supporting us, and we're working on capacity building. We are working on the capacity of not only the NBE, but also the banks themselves. And we are also working on the technological infrastructure, making sure that we have an infrastructure that supports fosters money market development. We are working on the legal framework for that money market, the interbank money market, to have a secure financial transaction. So, and also related to that is a monetary policy framework. We need to have a modern monetary policy framework that uses market-based instruments, which fosters development of markets, and at the same time also improves the effectiveness of monetary policy. Now, that's the first phase. The second phase is what we are discussing about today, which is launching a secondary market for equity and secondary market for debt, which is a stock exchange and also secondary T-bills market. And that's where this proclamation comes in. What the proclamation, why do we need a proclamation? Because so far we do not have a legal framework that establishes key institutions for capital market development that legalize even securities, trading of securities. So what this draft proclamation does is it gives a legal ground for key capital market institutions. It gives a legal ground for key securities and transactions themselves. And the third one it gives also legal ground for other institutions apart from the regulatory, for example, authority, and also making sure that capital market is safe and secure, and there is confidence among investors that they can invest confidently and freely. So if I go back to the key institutions, the first one is the one that he mentioned, the regulatory authority, which is the capital market authority. CMA, right. Exactly. So the CMA, its main objective is, of course, to protect investors, and number two, to ensure that markets are orderly, fair, and secure. And number three, to prevent, detect and prevent systemic risk. Right. So those are really the main key core principles or objectives of the Capital Market Authority. And the authority will be an autonomous government authority. Right. It will be accountable to the Prime Minister's office, to the Prime Minister. And it will have its own budget. It will have its own, resources. It would hire, by own salary scale. So it will be autonomous. Operationally, it will be autonomous, and it will have hopefully the confidence of all stakeholders.
Right. I think this is a very critical point you're making here. Investor confidence, right? And it comes from having a robust, fully empowered regulatory body. And as you said, it reports directly to the Prime Minister, and that also, I think, elevates its level of authority. It's very good that you start with the CMA, without regulation. The reason I say that, as you know, today we're in a regulatory vacuum when it comes to stock trading. I mean, take the banks or the insurance companies. They have hundreds of thousands of shareholders. It's like a giant private placement that we're discussing. And trading is essentially between individuals, or somebody's facilitating it. There's no price discovery, right? I mean, it's arbitrary, and it's not the way we should operate, especially when these institutions are very large. I mean, I saw a new bank that recently formed that has over close to 200,000 shareholders, like 185,000 shareholders, and yet it's like direct trading. It is just not fair, both for the shareholders, okay, because there's no price discovery, and enforcement even, right? So it's important to emphasize the point that you started with CMA. That's where every country starts with a very robust regulatory body. Now, having said that, tell us about the institutions that are intended. I know it's included in the proclamations. Walk us through what institutions are going to be set up, clearing, the depository receipts, and those kinds of things. And then, of course, the service provided. But just walk us through that.
Yes. So the CMA, and there's also self-regulatory organizations that we call, which is basically the industry itself, self-regulating with delegation of power from the CMA, because as you know, capital markets is not like banking or insurancing, where you have a homogeneous group of institutions where the regulator itself can basically regulate without any difficulties. Right. But we have a diverse set of investors, so it's very important that we have self-regulatory organizations that will self-discipline its members as well. And the third set of institutions are the key operators, the exchange itself, the Ethiopian Securities Exchange. We have also the what you mentioned as the Securities Depository and Clearing Company, which will make sure that securities are deposited. There's a safekeeping of the securities, and also safe clearing of transactions with counterparty risks assumed by these institutions. And then there are, the capital market service providers, a range of service providers, including brokers, dealers, asset managers, credit rating agencies, custodians, all investment banks. All these are very critical critical institutions for the well-functioning of capital markets. And then we do have other institutions. For example, we have a tribunal, as you might have seen in the draft proclamation. Why we need a tribunal? Because it's a very specialized, if there are legal issues, it's highly specialized market. We need to have a court that specializes in the market itself. If there are any questions or complaints about the CMA, between the CMA and other institutions, that court will take care of it. And then we do have, for example, collective investment funds, and we do have a fund that will also guarantee if there are failures, for example, compensation fund. So all these institutions will be critical for the functioning of the capital market.
So just to go back to that point, I mean, the Ethiopian Securities Exchange, that's the ESE, right? That's going to be the official name of it. Who will own that? I know you said these are part of the self-regulating institutions to be set up, power delegated to. Who owns this? Who's the intended owner of the ESE? Yes. Which is the exchange itself, right?
The exchange itself, correct, yeah. The exchange itself is, in principle, it is a private business. It's a shareholding company. It will be owned predominantly or primarily by the private sector. However, since we are starters, the private sector or private investors may need confidence, and as a way of providing that confidence, and as a market maker in the context of missing markets, the government will be entering or participating in the company as a minority shareholder. So the capital market, the proclamation, envisages a maximum government ownership of 25%, but the rest, 75%, would be owned by private investors. It could be domestic investors, foreign investors, hopefully, because it's a highly technical market, and we need the capital, know-how, and the technology of foreigners. That's very important, especially if we would have to leapfrog in this area. We really need foreign capital. We need know-how. We need technology. So we are hoping that this sort of PPP type initiative will be successful.
I think this is, again, a very good point to involve the private sector in the ownership of the stock exchange. It's also, I think it's the PPP approach is probably the right one, because we're launching something new to this country. And I think confidence. But the theme that keeps coming up, and as it should, is this point about confidence, right? In all the markets that I've certainly been working in the global markets for many, many years, one thing that has always been emphasized is confidence, confidence, confidence. And we're talking about even in well-established markets like the US or in Europe that have been operating 100 plus years, that's always it. Here, it's even more important, right? It's critical. Educating the public, creating awareness. This is not like something you can just launch and say, let the market take care of itself. As you mentioned, enforcement. When I read the proclamation, which by the way is very extensive, it has addressed all the key components. But some things I've been noted there is how the regulatory body intends to build confidence. It has enforcement mechanisms. Criminal charges could be brought against those who manipulate the market, right? As you've also mentioned, a formal tribunal would be set up. So just explain to us what thought went in through to make sure that confidence is built both from the regulator and the enforcement side of it.
Yeah, you are right that it's very important to have public confidence, because we are talking about bringing the public to put their money in this market, right? So it's very, very important to project confidence in this. And that's why we needed that proclamation, which provides a legal framework whereby the safety and security of the public money and investors' money will be ensured. And that is through the regulatory framework. And the CMA has the power and obligation and the duties to work with public prosecutors, with Attorney General and with the federal police in identifying illegal practices, trading practices, for example, and prosecuting, provide and support and work, collaborate with these prosecutorial institutions. And that's one way. As you might have read, it has a very extensive, very extensive set of criminal liabilities, right, for example, and clearly identifying what are prohibited trading practices. For example, insider trading, false trading, manipulation. All those are clearly identified, drawing that boundary between legal trading activities and illegal trading activities is very, very important, that transparency. And once that line is drawn, there is also a criminal liability, both financial and also imprisonment. And they range from minor liabilities to rigorous imprisonment, depending on the country's legal framework. So that's also very important. The other, I think, issue is that we have a regulatory framework for transparency, for example, reporting requirements. Right. Any trading activity had to be, especially if it is deemed to be necessary by the Capital Market Authority to be reported. They have to be reported, right, and also reporting to the public as well, so that investors would know important, pertinent information pertinent to their investments. Right. So all these issues are very well articulated, clearly set out in the proclamation.
So continuing on this theme of confidence building and all that, you've taken a lot of steps already, especially, for example, in the service providers. We're talking about brokerage firms. People have to be certified. It can't just be anybody like we're doing today. Today, anybody is a stock trader. There's nothing to regulate you. There's no disclosure requirements, standards. But you've already taken steps to make sure that when this thing is launched, from day one, there's already a body of an ecosystem of licensed brokers, others who will be market makers, all will be licensed by the CMA. Correct. Right? Yeah. Talk about that. Which is, for example, you've trained over 100 some plus people already, right?
Yes.
You're involving the universities in the training. You're involving others to talk very quickly about what has already been done, what you anticipate to do going forward.
Yes, very good. So every capital market, every professional involvement in the capital market would have to be licensed by the Capital Market Authority, regulated by the Capital Market Authority, whether it's individual brokers or big institutions, investment banks. So the criteria for approval of licenses, revocation or rejection of application, everything is clearly articulated in the proclamation. That's very, very important. Number two, it's very important issue is the capacity building that you just alluded to, which is most of these activities or services are very new to our country because we didn't have a market so far, right? So there is no knowledge base. So what we did is we have a capacity building strategy. The near-term strategy is to, train both the public officials who are likely to be regulators, and 2, market participants, and 3, academicians. So what we did is, from a public official point of view, as I mentioned earlier at the beginning, we had a working group, intergovernmental working group. That working group has been given training over the last 1+ year through on-the-job training. We have embedded capital market experts who are working with this group, and 2 country visits, to capital market institutions, visiting capital market institutions in neighboring countries like Nairobi, for example, Kenya. And the third one is training, providing formal trainings. And that training that you mentioned is being given by the Chartered Institute of Securities Investment based in London, which provides training and certification for someone who would like to be a certified capital market service provider, broker or dealer or whatsoever. So those trainings, as you mentioned, have been given to public officials, and the opportunity has been provided to banks, insurance companies, pension funds, because they are likely to participate in the capital market as capital market service providers. And at the beginning, we are providing that training for free, but going forward, they will be paying for themselves, right? And the third one is institutions, as you said, academic institutions, because they are very important for future capacity building. So we have given training to economics department, finance departments, and legal departments who are teaching, professors teaching courses in these related areas. So that's one angle. The other angle on the near-term capacity building, of course, is that we're hoping that, again, foreign experts will join once we launch the market, and that's also the quickest way of developing capacity, because there will be cross-fertilization. And more medium to long term is, of course, building our own capacity of training. So for that, we have actually this financial training institute that's being relaunched by the NBE, and a draft proclamation has been already submitted to the Council of Ministers for the establishment of that institute, whereby we will be producing capital market experts, bankers, and insurance, insurance or pension fund managers whatsoever. So any financial sector issue training will be provided by that institute over the over the long term.
Very good. So, but I want to then now talk about what types of companies are likely to list because this has to lead up to something, right? The end result is we're going to have the listings of companies on the Ethiopian Securities Exchange, ESE. So, just quickly talk about who you think or you guys anticipated would be listed, and who do you think will be the investors, the kinds of investors. We'll have retail investors, of course, but the institutional investors. This has been anticipated. Just walk us through, because we're pretty much running out of time.
Yeah. So on the supply side of securities, I think you already highlighted also our own thinking, which is that I think in the near term, banks are likely to qualify quickly for listing, because their accounting standard is already up to standard, international standards, and also multinationals are also likely to be easily ready to issue securities in the near term. And then I think, on the demand side, of course, the main institutional investors, the source of liquidity are likely to be pension funds, both the public and private pension funds. They have enough, liquidity to support the market, and also the insurance, companies. They will also be one of the main source of liquidity, and hopefully the collective investment, schemes or asset managers will be able to mobilize finance from the public and be able to provide liquidity. So I think going forward, maybe that could be the subject of our next discussion. Is going to be, I think, a private sector initiative to make other companies, especially non-financial and local companies, get ready for listing, because there are listing requirements. It's very, listing in the securities exchange has a high bar compared to just selling shares when they are established. So that will be, I think, a big private sector agenda, private sector initiative going forward.
In summary, great initiatives. Let's look forward to launching this thing. I'm sorry we've run out of time, but we could have another phase 2 discussion once we have more to discuss. But for today, thank you for being here. Thank you for the discussion. And for our audience, hopefully you've enlightened them about a very exciting initiative, major policy reform as part of an overall economic reform, and also as part of the homegrown economic reform, but also within the subtext of the financial service sector reform. This is exciting. Thank you very much. And this is the end of our program. And for our viewers, thank you for watching this, and we look forward to another discussion next time. Thank you.
Thank you very much.